Thanks, guys. I appreciate that. So for those of you who don't know me, my name is Allison Ostrander, and I am the Director of Risk Tolerance as well as an Options Specialist here at Simpler Trading. And tonight I want to talk to y'all about my Compound Butterflies strategy. This is a low risk, high reward, and a really forgiving trading method depending on how you construct it. So I'm very excited to talk with y'all tonight and introduce the strategy that I've found helpful within the last year and certainly going into this year. So just an example of the strategies to start off the bat to give you kind of an idea of what it is. This was a trade that I did in Tesla back in August. I opened it on the 17th, closed it out on the 20th, so very short dated, wasn't in the trade for very long. Ended up with a $767 profit per contract. So just on one contract, you would have walked away with over $700 of profit. And it was a 329% return on my risk. So well over 100% return, great risk versus reward, and was able to lock it in with just a very short amount of time in the trade. So what will you discover on tonight's webinar? Well, like I mentioned earlier, I'm going to introduce to you how to trade uncertain markets. I'm going to talk about my strategy for profiting on both consolidating and directional markets. I'm going to talk to you guys about my dynamic duo of indicators. Some of you guys might already know what that is. And also introduce to you the compound butterfly strategy. So as I mentioned, for those of you who might not know me or know me very well, I started my trading journey fresh out of college with a BFA in theater performance. So it wasn't your typical finance degree or anything like that that I got when I first started to learn how to trade. And I was actually introduced to that trading from my dad. He had been doing covered calls at the time and was successful in that, wanted to dive into options and learn how to trade that. And he thought it was a great idea for his kids to learn how to trade as well. And so he kept kind of suggesting the idea, if you will. He kept bringing it up in conversation. And when I graduated, I was like, well, that actually sounds a bit better than waiting tables. It might actually be able to help me in my endeavors within theater and things like that. So I decided to, take him up on the idea, did some online webinars, started paper trading to kind of get the idea of how it worked, right? And once I got a feel for it, once I was able to grow my paper account, I paid for some one-on-one coaching. And within my first real trade, my first real money trade, I had completely recouped my coaching fees and also locked in a profit for myself. And it was at that moment I realized I had a second passion. And I haven't stopped since. So trading at first seemed easy, right? Especially when you start off with a win, right? For those of you who have done that, it seems like you already have it in the bag. You know what you're doing. You're good to go. But the more I started trading, the more I realized there was a problem bubbling below the surface. And it's what I call the dark side of trading for my Star Wars fans out there. And there are a few things that were negative to me in regards to trading. The first thing was I had my eyes glued to my charts and futures long after market close. Who's been there, right? Who, especially with the day that we just had, right? Who's checking out and seeing how Asia's opening, how it's closing, how Europe's opening, looking at the futures of certain symbols, right, of the overall market, and you're kind of staying up watching that because you just can't help it with the trades that you have on. And maybe you're also getting that lack of sleep due to how many trades you have on, right? Maybe the majority of your portfolio is completely invested to where you're kind of anxious and staying up about it because you're worried about what's going to happen to it the next day. And of course, with that lack of sleep, right, with that constant fret and worry, your emotions start guiding your trading instead of the technicals. You start hoping that a trade is going to work out rather than playing through the strategy, playing through the game plan to see if it does or not. And in turn, because you're kind of hoping things are going to work out, or you're trying to jump in, maybe you're chasing a high, right? Like we've seen in some of these short interest plays, right? Maybe you're kind of chasing that need rather than going off a bit more of the technical standpoint of it. And in turn, right, when you let your emotions play through, you end up with staggering losses. And those losses just kind of compound themselves on this whole dark side of trading, right? It just adds to the emotions. You get fret because, you've already taken losses, so you don't want to lose any more money. And it can kind of spiral out of control if you're not aware and conscious of it. And so because of that, I realized after I took a staggering loss, I took a step back, tried to figure out where this dark side of trading was coming from. And I realized that all of these issues stemmed from one source, and that is capital risk. And in turn, it's what my own personal risk tolerance was for trading. And my lack of understanding capital risk is what fed into all my negative thoughts about trading. And in turn, it fed into that dark side. So, because of this, right, it causes emotions to guide your trading and it can lead to further loss. So, for me, understanding capital risk was a big key to how I remained successful as a trader. So once I realized that what it was, right, that led into this dark side of trading, it became my new focus. Everything I do now around trading, it involves risk and understanding what that tolerance is and keeping it low. So risk is my main focus around trading. Each trade I took constantly and still take today, right? It constantly has me analyzing my risk versus reward on the individual trade, as well as what that risk is going to do for my overall account. And anytime I look at trading or I develop a new strategy, risk is always my guiding focus. I always want to make sure that I'm keeping on a low risk and ideally a high reward or a high probability of the trade working out. So that way I can grow my account and not feed into that dark emotional side of trading. So uncertain markets, right? Certainly in 2020, it was a year for the history books in many ways. Not only was it a year for the coronavirus and worldwide lockdowns, right? People getting stuck sometimes even in other countries, but it was also a year that the market saw some crazy movements, right? We had a dramatic sell off down to monthly support levels that we saw at the beginning of the year. We saw a bit of choppiness and consolidation. And then we saw that dramatic turnaround back up to new highs, right? New highs within the market after such a strong sell off that typically prior in the market during the dot-com bubble or 2008, right? Those took a few years for the sell off. And then certainly quite a few more years for the rebound back up. And within last year, we saw that downturn and we saw that move higher. So it was a year to truly test traders and their accounts and their sanity, right? Or at least it was mine. As a mom of two under two during 2020, it was a true test trying to multitask, right? Both of us are working here at the house. So it's kind of a juggle of who's going to watch the kids when, who can focus on the kids when, having that patience to be able to deal with high screen pitch and screaming, you know what I mean? Or just the fun babbling that you get. So 2020 was not a year to ignore the charts, but for me, it was also a year where I couldn't focus on them 24/7 as I would have done in the past because, I have feedings, I have diaper changes, all that fun stuff of juggling things. And maybe you're the same way, right? Maybe you're stuck at home in the exact same sort of situation of, okay, let me try and figure out how I'm going to juggle work and family life within the same building. And so at first, I struggled to find the time for it all. I needed strategies that could be low risk to not blow out my account if they didn't work out, but also still left a great profit potential to continue to grow it. And I also needed strategies that were a bit more forgiving of the underlying price move and could still allow me a profit, even if the exact move I was looking for didn't occur. Right. And we've certainly seen some of that recently where you might have thought things were going to go bullish and then we took the downturn today. And now you're stuck with your account red because it was a bit more of a directional trade idea, right? So something that's a bit more forgiving in this market. So the strategy is the compound butterfly strategy. So what is it? Well, it's an option strategy that is primarily used as a short dated trade strategy, usually in and out of trades within the same week. I think the longest trade I've been in using this strategy off the daily chart is like a week and a half. So for me, I don't like keeping capital out there very long. For those of you who know me and know the strategies that I trade, right, I like to protect my capital pretty quickly. And it's still the same with this strategy here. However, unlike the normal, most short dated trading strategies that have little time for management if moves go against you, this is a very forgiving strategy that still allows you to take a profit, even if the underlying price doesn't completely move in your favor. Right. And that's what I like about this. That's what's certainly been helping out in my main account quite a bit, is this forgiveness factor on the moves. So who is the compound butterfly strategy for? Well, it's for traders who don't want to be holding on to a trade for very long, right? It's for anyone who can't sit in front of their computer all day or doesn't want to, right? Maybe you have to work another job as well, and you're kind of trying to juggle that in trading. And so you can't stare at your charts all day because you have other tasks and priorities that you need to take care of, or maybe you're in retirement mode, right? You just don't want to sit in front of your computer. You want to go out and fish or golf or, take a walk or go to the beach or something. And so this is a good strategy for that as well. And it's a strategy that's great for traders who are uncertain about the market, right? Certainly with last year, with how crazy and choppy and directional everything was all at the same time, it felt like this is a great strategy to be able to trade in that and still allow profits, minimize your risk, and certainly leave the possibility for some great profit potentials out there. And it's for traders who like a forgiving strategy that has that great risk versus reward, just like I mentioned, right? Where it's not a big risk for your account, but can lead to over 100% gains. And also can be forgiving if that market move doesn't quite follow through the way you were looking for. So here's another example, right? This was a trade I opened on the 30th. I closed it out on the 3rd. So once again, only in it for a couple days. It was a $43 profit per contract, a 22% return. And this was on Adobe here. So wasn't in the trade for very long. The move didn't quite follow through like I was looking for, but I was still able to take the profit, still able to return my capital risk. And then I was just on to a new trade. So what is the best type of market condition? Well, the strategy can be used in any market type. It's great in trending markets, both bullish and bearish. However, it also works great in consolidating and choppy markets too. So here's another example, right? This was Netflix. This is when it was completely trading flat and sideways. I opened this trade on the 8th. I closed it out on the 11th of December. It was a 302 profit per contract, a 254% return on risk. So once again, not in the trade for very long. Excellent profit potential on the risk versus reward, right? It was over 100% return on my risk on the trade. And just on one contract, I brought in a very nice profit and brought that back into my account overall. So what account size do you need? Well, this is a wonderful strategy for traders with any account size, right? It's certainly something that you can build into and size up. But it's also a great strategy for those with smaller accounts, right? I don't trade very big accounts. My mastery account right now is about $5,000. And my main account is a similar size. So I don't trade very strong accounts, but I'm able to use this strategy. It still stays within the risk parameters of my account overall, and I'm able to take those nice profits within it. And it's also for traders who certainly don't want capital tied up in long-term trades, right? I certainly have some share positions out there in a few of my accounts. Certainly the one I'm growing for my kids. And every now and then I'll do leaps and things like that. But typically, most of my trades, I am in and out. I do not like staying in them very long. So if you're like me, who likes to have that capital typically returned back in and back in cash, this is a great strategy for you to consider. Once again, another example, this was open on the 16th of December in Lulu, closed out on the 17th. So I was literally just in it for one day, right, overnight. Took a 93 profit per contract and 85% return on risk. So good risk versus reward, wasn't in it for very long, and was able to recoup and recycle that capital. So why the compounding butterfly strategy? Well, my trading focus has always been on ways to reduce and to protect capital risk. So I also wanted to see my account grow with bigger profit potentials, right? The strategies that I typically use allow for a great consistency on profit, but sometimes it leaves out those huge gains and returns. So I wanted to try and use and figure out a strategy that's still kept within my trading plan of reducing and protecting capital risk, but also allowed for some bigger profit potentials. So that's why I ended up developing this, because it allowed me to protect myself from a loss in some case if the move didn't go for me and didn't follow through as it intended, but also allowed for those excellent profit potentials too. So, oh, I lost the example for this one. Let me see if I can find it really quickly. I apologize, guys. Oh, there it is. Okay, never mind. It just took a second to load. I was like, that's weird. I walked through all this to make sure it was good. So it opened on the 18th. This is when I did recently, back in January. So I opened it on the 18th, closed it on the 19th. So once again, only in the trade for a day. It was a $246 profit per contract and it was 170% return on risk. So once again, great risk versus reward, 100% return above that on my risk overall for the trade. And I wasn't in it very long, right? I was only in it overnight. So how can we profit from a move that doesn't follow through? Well, I know there are many out there who don't want to trade in uncertain markets, right? Maybe last year you actually sat in cash for most of the market because you just didn't like the crazy swings until things started to give you a clear technical signal, right? And of course, with the crazy moves in the market that we saw last year, it is bound to make any trader who may have lost money during that time a little skittish, right? If you ended up losing money last year, or maybe for at least part of the year you lost some money in that downturn or something like that, I can understand you maybe being a little bit hesitant on how to trade your capital out there, especially if you've blown out an account, right? I've certainly understand that and been there. And this strategy can be implemented with an intention of the trade following through, right? That's the idea. That's the reason why you put it on. But it has that flexibility to still allow for a profit, even if the underlying price is being a little less cooperative. So here's another example of the compound butterfly strategy. This has a few parts to it, which sometimes is involved in the strategy. So I opened this trade on the 22nd. For part one, I closed it out on the 24th. It was a $47 profit per contract, and it was 11% return on risk. So in this case, it wasn't a very strong risk versus reward on part one. But the idea is that the $47 profit on part one ended up completely covering my risk on the second part of this trade. So it was a way for me to protect capital on the second half and kind of let the trade go a little bit longer. So once again, the second part was still opened that same day. They're opened at the same time. So on the 22nd, I closed it on the 30th. It was a $172 profit per contract on the second half, and it was a 220% return on that portion of the risk. So what part one did is it covered the majority of the risk on part two. So it reduces that capital risk overall. Once again, in and out of that part of the trade very quickly. And then what it allows is the second part of the trade to go a little bit longer to where I get that nice profit potential, that excellent return on risk. And overall, right, locked in over a $200 profit on the trade just based on one contract. And certainly got that nice risk versus reward return too. So what are the benefits of the compound butterfly strategy? Well, just like we walked through, right, it has some excellent risk versus reward scenarios. It also has profit potentials well above 100% returns, right? What we've walked through on some of the trade examples. It's a very forgiving strategy. So if the move doesn't follow through in your favor, it still allows you a profit, or it at least helps protect some of your capital risks. So it might not be a full loss on the trade. And then of course it has short-term trades to be in and out of rather quickly. So here's another example. This one's also done in several parts. So the trade was opened on the 29th. The first part of the trade, this was actually a part of the trade where the price really started to move. So I closed it out quickly for just a small $7 profit. It was 11% return on risk. But what I did is I reset the trade. So once again, the move started to happen, but it happened a little bit more quickly than I was expecting. So still a forgiving strategy though, because I was able to take the first part, reposition it to allow the trade idea to still work out. The second part of the trade, which was also still open on the 29th, this one did what it was supposed to. I closed it out on the 4th, locked in a $75 profit per contract, which was an 18% return on that part of the trade. So overall, between the part one and part two, which, you know, I wouldn't really count part one. So just between part two, right? What this does is it covers the remaining risk that I had out there. And so it basically allowed me to continue to hold on to that side, which on the last one that was out there, this was actually opened on the 30th. So 12:30, closed it out on the 7th. This part of the trade was a $427 profit per contract, a 459% return on risk on Tesla. So what this did, once again, by the way I set up this trade with this strategy, is I basically took a quick profit on a very forgiving portion of the trade, and it covered the risk on the remaining part of the trade, which I allowed to play itself out. This was actually the longest trade I've been in using this strategy, was this one here. And it still allowed for an excellent profit potential versus the return on the risk. So it was a 3-part trade. Usually it's only a 2-part trade. The reason why it's 3 parts though is because the move started to happen a little bit more quickly. So I had to push out technically the second part, which is this one here, out a little bit further. But still, once again, because of that, right, you can see it was very forgiving on that move, still allowed excellent profit potential. And it's still, between this second part of the trade, right, still covered the majority of my remaining risk out there. So it kept my risk very low overall. So what time frame can this be used on? Well, I primarily, as you can see in my examples, use this on a daily chart. I don't usually stray from the daily chart too often, though it can also be used on a weekly or monthly time frame if you don't mind being in the trade for longer, right? So the further out in time you go, the, of course, longer that you can anticipate probably being in a trade to allow those signals to work out. For me, because I don't like being in the trades very long, this is why I typically stick to it on a daily chart. The strategy also solves a big problem. It's a great way to grow your account with a very forgiving strategy to market movement. And the crazy market that we had last year, it's good to know I have something like this in my toolbox that allows for a great profit potential, even if the underlying price decides to change things up a bit. So here's another example of one in Tesla. It was opened on the 16th. I closed it out on the 18th, so it was only 2 days I was in the trade. It was a $50 profit per contract, and it was a 12% return on risk. So this is another one where it wasn't quite working out in my favor. I was able, in terms of the move I was anticipating, right, it didn't quite follow through, but because this is a very forgiving strategy, I was still able to take the profit on the trade and lock it in with the good till cancel I was looking for. So what are the keys to success? Well, one of the main keys to the compound butterfly strategy, just like most of my strategies, is the divergent par and the compound breakout tool. And they're what I call my dynamic duo of indicators, my Batman and my Robin. So a person, right, travels along their trading journey. They discover new ways to identify setups on the charts. I still like to do that, right? I still like to try and figure out if there's an indicator that can help still give me a better edge on my trades. But the 2 indicators that I use certainly have been so beneficial to me that I'm not going to drop them ever when I'm considering a trade idea. And the first one of those is my Batman of the 2 indicators, which is the divergent bar. And so this is one of the ways I found to identify setups. And to identify a proper divergent bar, it takes time to do the math. The problems I ran into is that it took too long and usually kept me from quickly finding setups. So I wasn't able to go through as many charts as I wanted to, because I was spending too much time doing the math to figure out if I had a valid signal. And of course, the other issue is when you're doing the math by hand or even with a calculator, right? You're subjected to human error. And myself being a dyslexic, it's very easy for me to accidentally just switch a number quickly when I'm, frantically trying to figure out if a signal is valid and I can implement a trade in time before market close. And so sometimes I would switch those numbers around, think I had a valid signal, didn't have a valid signal, and then I'd be stuck trying to manage a trade that I should have never been in the first place, right? And then the second of the 2 indicators, or what I call the Robin of the 2 indicators, is the compound breakout tool. And this one is comprised of several different signals I look at involving multiple studies. So it's how these signals line up together between these 3 studies, and it's the stochastics full, the MACD histogram, and several different simple moving averages that I use. So when all 3 studies are individually, right? Individual, maybe you've used one of these or 2 of these in the past, they can be great to look at, but they can sometimes lead to false signals individually, or at least that's what I found. So what I did is when I looked at all 3 indicators combined, it helped clear up the false signals, but it still created a cluttered chaos on my charts. It was, if you thought my charts kind of look crazy now, you did not want to see them before I came here to Simpler Trading, because it was just chaos. I knew what I was looking at, but it was definitely chaos. And so there had to be a simpler way to view each of these signals. And so for my quest for simplicity, when I joined Simpler Trading, I was introduced to the master inventor of indicators, Mr. Eric Purdy. And I was told that, if I had some indicators or some things that I was looking at my charts that I wanted simplified, to come to him and see what he might be able to do. And so I found myself at Eric's doorstep, hoping once again he might be able to work his magic so that I could quickly identify the divergent bar with just a quick glance at my chart. and also combine the signals that create the compound breakout tool. So it cleans up that chaos. It gives me a much simpler and easier view to look at it. And also it's easier for me to see the signal, right? I'm not trying to make sure everything's in line with the individual indicators just on my charts. And so I explained to Eric the criteria and math needed to determine both individual indicators. And he was able to create the divergent bar indicator and the compound breakout tool. And this dynamic duo of indicators is what I use to trade the compound butterfly strategies. This is what helps me determine when to jump into a trade, maybe when to get out, or to understand when it might be changing direction. So the divergent bar indicator first, what does this indicator do? Well, it's used to help determine whether the next bar two will create a higher high compared to the current bar. It can also help determine whether the next bar two will also create a lower low or not compared to the current bar. And it also, right, the combination of both, it can also help determine when the underlying price can start to consolidate or be a little bit choppy, which is great for this strategy. The compound breakout tool, this has also helped to determine the trend, whether it's bearish, bullish, or consolidating. And it's also helped to identify the start as well as the end of the trend. So the divergent bar indicator can kind of be used shorter term because it's usually just within a few bars that you're looking for the move to occur. And then, of course, when you combine it with something like the compound breakout tool, it can just help determine whether you're getting a bullish signal in a bullish trend, a bearish one in a bearish trend, maybe consolidating, they're both in agreement with that choppiness. And so I found when they line up together, it's usually a go for a trade entry. And it just really depends on what kind of strategy I want to implement given the overall market or the overall chart setup that we're seeing. So here's an example of both of these indicators on SPX for my charts. These light white colored bars are my bullish indicator. There's something I've changed. You can change the colors on these. We'll talk about that in a second. But you can see, right, typically on a bullish signal, we're looking for a follow through of some sort of higher high. So here the next bar got the higher high. Here, technically the next bar, but certainly the next two bars got a higher high. Here, the following bar, the higher high. This one as well. This one took 2 bars to follow through. That one was the next bar. So you can see pretty good follow through to the upside. Bearish divergent bar, same thing. We're looking for a lower low within the next 3 bars overall. So here was a lower low. This one took the 3rd bar to follow through, which was also a bearish divergent bar. That one immediately followed through. This one technically followed through to the downside, and this one as well. So you can see the divergent bar indicator kind of works out like that. And these were all back-to-back divergent bars, which can be a sign of consolidation. You can kind of see that here, how they just kind of chopped around for a bit before it went back into the trend. Now, what can we match that up with? Well, the compound breakout tool down here. Here we had a bit of a choppy consolidated range. So we knew that if we did take these signals, we might want to take our profits quickly. And certainly you can see here the overall price just kind of was flat within this range. And then we started to get a bullish signal indicating that we could start to go into a bullish trend. And that's what happened with the price here, right? The overall price went to the upside. So certainly when I start to see that, focusing on the bullish divergent bars, you can sometimes get those great profits because they're nicely in line. So what time frame? Well, the divergent bar indicator and the compound breakout tool can be used on any time frame. It can be used from an intraday time frame all the way to a monthly time frame. I certainly love these indicators for that. I will say the divergent bar indicator on the intraday time frames, I typically keep it to at least a 30-minute chart or higher. Kind of takes away from some of those false signals that the smaller time frames can print quite rapidly. But the compound breakout tool I certainly use on every time frame, even down to a 1-minute chart. So the divergent bar indicator can be used, like I mentioned, on any type of bar. I personally use it on a standard bar. However, I know a lot of you guys prefer candlesticks, and it can work on that as well. The best part about both the divergent bar indicator and the compound breakout tool indicator is once they're uploaded, there is nothing else you need to change except for the color if you choose to, right? If you're colorblind and you need to change those colors, it's the only thing that you really need to do. Eric has done an excellent job in creating these indicators. So once they're added to your charts, you're good to go. So here are some just more examples of this strategy. Here was one in PayPal, opened it on the 21st, closed out on the 22nd, $41 profit per contract, 24% return on risk. So just a quick profit overnight, not a bad return on risk, and then recycled the trade back in. Here is another example on Tesla. Here is one where I opened it August 20th, closed it out on August 21st of last year. So I was literally in this trade just overnight, ended up with a $1,530 profit per contract. So just on one contract, I had locked in over really over $1,500 of profit, and it was a 392% return on risk. So once again, not in the trade for very long, excellent profit potential, great risk versus reward, over 100% return on that move and what that allowed me for here. Netflix, here's another example a bit more recently. I opened this trade on the 7th. I closed it out on the 8th. This was a $61 loss per contract, and it was an 89% loss on risk. So not all the trades are going to work out, right? That's just the fact of trading. Sometimes we're going to end up taking a loss. But here's just an example that shows you, right? I'm not still in the trade for very long. Ended up accepting the loss here. But it was only a $61 loss. So certainly if I was in the Tesla trade, right, that easily covered the loss on my Netflix trade and still keeps me net ahead. But let's say, right, I didn't take the Tesla trade. Well, here's another example of where that loss is still easily covered. Here was Visa. I opened this on the 15th. I closed it out on the 17th, so I was only in it for 2 days. I ended up locking in $100 profit per contract, which was a 48% return on the risk. So not a bad risk versus reward. And that profit, once again, easily ended up covering the loss on the Netflix trade that I had prior. Here's another example. This one was on Facebook. This was opened on the 18th. It was closed on the 23rd. It was a quick $20 profit per contract. It was a 9% return on risk. This is one where you took the quick profit, see if it could help the other side out of the trade, and either way protected the capital risk there. So not a bad risk versus return, and a very forgiving strategy for this one. Netflix here, opened it on the 19th. Closed it out on the 20th. So once again, only in this for a day. It was 162 profit per contract and a 207% return on risk. So excellent risk versus reward. And it was very forgiving for this trade because it allowed for a certain move, but it also allowed for a move to exceed it. This was one held overnight through the earnings play, which some of my mastery folks might have been a part of, right? No. So very forgiving strategy that still allowed for excellent follow through, even if the move was greater than what we were anticipating. And then here's Amazon, of course. It was opened on the 8th, closed it out on the 11th. Once again, not a very strong profit overall, but it was very forgiving in the sense that I could take the profit quickly and still move my capital onto a new trade, even if the price didn't do exactly what I was anticipating, and it was a 7% return on risk. Here was another part of Amazon, right? This one was opened on the 14th, closed on the 15th. So I was only in this for a day. It was a 470 profit per contract and a 142% return on risk. So over 100% return on risk, right? Only in it for a day, and excellent profit potential per contract. So what we covered, well, it's an introduction on how to trade on certain markets. It's my strategy for profiting on both consolidating and directional markets, as well as my dynamic duo for indicators, right? You certainly heard me talk about the divergent bar and the compound breakout tool. And it's my introduction to the compound butterflies strategy and how I like to use these butterflies to allow for profits in my account. So what's next? Well, certainly blowing out your account can be frustrating and disheartening. And the current work from home environment, even the most seasoned traders can still have problems with juggling responsibilities and still growing their accounts, right? Maybe you're like me, where you're trying to juggle everything with your spouse and keep the kids all in line. Maybe it's just, you're trying to juggle work and still wanting to trade and still be successful in growing your accounts. And of course, everyone can use some extra clarification on the charts and narrowing down these great entries and exits, right? Understanding overall when might be a good time to jump in and jump out of a trade. So overall with these indicators, right, will they work? I have had this question asked in the past, right, for the divergent bar and compound breakout tool. So they are available immediately for TradeStation and Thinkorswim. And I believe TradingView as well. I know definitely for TradeStation and Thinkorswim, they're available. And they will be coming up soon, from what I've been told, to Tastyworks. So we're in the process of getting some of our indicators onto Tastyworks. I know the divergent bar and the compound breakout tool are on the list to eventually get over there, which is exciting. So if you already have those indicators, once they are up on their platform, it's not like you're going to have to repurchase them or anything like that. You're just going to have to let us know so you have access to them. So you can still use this ideally on whatever your preferred platform is. So to kind of answer these questions, right, to understand to how to grow your account, right, get these great risk versus rewards, have a very forgiving strategy, I want to introduce to you guys the Compound Butterfly Blueprint class. So it's my strategy, my very forgiving formula for steady gains in uncertain markets. So with the Butterfly strategy class, right, this is a class that I'm doing coming up. There are 3 different packages that are going to be available to you guys. The first one is the basic package, which of course includes the Saturday class live. For those of you who might not be able to be there live, certainly the class is recorded, so you'll always have access to it in the future on the site. It includes the divergent bar indicator for those of you who don't have it. We'll also have an indicator install session, which I'm very excited for. So you'll see how the indicators can be installed. Any questions around that should help solve that out. And of course, you'll get the bonus introduction to verticals class, which has already been pre-recorded. So if you're newer to butterflies, you don't quite understand how they work, butterflies are basically a stepping stone from vertical spreads. So I pre-recorded this class, and that way, if you understand what vertical spreads are, you'll certainly be able to understand and be able to step up into what butterflies are. So I made that available to you guys. That way, as soon as you purchase it, it's already in your class area, your class drive and folder and stuff. And that way you can be able to view that instantly prior to the compound butterflies class, and you'll always have access to this too. So all of these things are available in the basic package at $497. The pro package includes all of that, right? It includes the Saturday class, the divergent bar indicator, the install session, as well as the intro to verticals class. But it also includes the compound breakout tool and 2 days of the pro live trading. So if you don't have either of the indicators and you want my dynamic duo, right, for the class, which certainly I find them both to be very useful indicators. And I use them for all my trading strategies and entries and exits. So if you don't have either, indicators individually are going to be priced more in the store. And you get, of course, the Saturday class, right? You get the bonus session as well as the bonus class on top of it, and 2 live trading days. So ideally, right, can't promise anything, of course, but ideally with the live trades that we take, with you being able to see how the indicators and the strategy works in real time, you can kind of pay for the education and the tools themselves. And then with the elite package, you get everything I mentioned: the Saturday class, the divergent bar, the indicator install, the verticals, right? Everything in the basic package, everything in the pro package, including that compound breakout tool in the first 2 days of live trading. But you also get an additional 2 extra days. So I'm having a total of 4 live trading days with this class. That way you can really see how to implement the strategy. It gives us enough time to put on these trades, to ideally follow them through, and to see how they worked out in the end. So if you already have the indicators, right, some of you guys certainly already have them. That's not a problem. Give sales and customer service a call or send them an email, and they'll be happy to take care of you. You can call us at 512-266-8659 or email us at support@simplertrading.com. But we're not going to make you pay for the indicators twice, right? So if this is a class that you're certainly interested in and want to be able to do, but you already have the indicators, not a problem. You can certainly take that off of the packages and pay a different price, so you're not paying double, to still be able to either just attend the class or to do that with the live trading days. So once again, the basic package, right, it's $497. You can kind of discover how I use and combine these butterfly strategies together to help get targets and returns anywhere, between 20 to 200% within a week's time, depending on the strategy and how it follows through. It's also a powerful and flexible setup that is specifically designed to capture moves in uncertain and choppy conditions. So the strategy we've got 6, it's a Saturday, of course, like most of our classes are, and it's from 12 to 4 p.m. And I typically try and keep it to 4 p.m. I know with the first class I did here, I think we went until like 6, right? So if for some reason we go longer, just because I have a lot of information I want to give to you guys, right? I want to make sure you fully understand everything. All of it's going to be recorded and good to go. So you'll always have access to it if you can only be there for a portion of the class, or maybe you really want to take it, but you can't be there on that Saturday. It's all recorded for you to where you have access to view it in the future. So who's the class for? Well, it's great for traders who want a low risk and short-term opportunities for trading the market with potential for steady gains in an uncertain market, right? To have that excellent risk versus reward trade overall. And so in the basic package, like I mentioned, it also includes that divergent bar indicator, which allows you to help time out the entry and potential directional pick if you need to do that for the strategy. And of course, it has that indicator install session, right? So you're getting your new indicators and charts. You can help get them set up quickly before the class with this easy tutorial. It will be actually Friday, February 5th, so you can have them set up the day prior from 3:30 to 4:30 p.m. That way they're good to go during the class, and certainly good to go during the live trading if you choose to do that. And then, of course, the basic package also includes that bonus class, the Ultimate Guide to Vertical Spreads. So these powerful setups are the best kept secret of the options income traders. I love vertical spreads. For those in the mastery, right? That's the main thing I typically trade in there. And so vertical spreads are the stepping stones into butterflies. So understanding this strategy, you'll be able to build off of all the different things we're going to learn in the compound butterfly class. And so, of course, with the pro package, right, you get everything that we talked about: the Saturday class on February 6th, the divergent bar indicator, the bonus indicator install session on the 5th. The compound breakout tool is included in the pro package, right? So unlike the basic package, you get that. You also get the, of course, the bonus verticals class, and then you get 2 days of live trading. So the compound breakout tool, this to me is the Robin of my 2 indicators. When I can put that together with the divergent bar, it can make for some great entries and great follow through on some setups. And then, like I mentioned, of course, you get the 2 days of live trading. So this is an opportunity where you can kind of see how I use the strategy in real time in the market, how I look at my charts and identify setups. It's certainly a great place to continue to ask questions. I'm always happy to help ask questions or take a look at charts that you're looking at to see, hey, does this make sense for a setup? Or, what style of the compound butterfly would you use in this chart here? And so our first live trading day is February 12th from 1 to 3 p.m. It will also be Monday, February 15th from 1 to 3 p.m. for those first 2 live trading days. And then, of course, right, with the elite package, you get the extra 2 live trading days, no matter what. For the pro and the elite live trading days, if you're out and about trading, right, and we're opening some trades, maybe you can't be there on one of those days to sit in front of your computer, but you still want to take advantage of the trade alerts. We do have the push notifications sent for those of you signing up by phone. So they're sent out with the elite package. Of course, they're also sent out with the pro package too. And then you also get those 2 additional days of live trading with the elite package. So it's a great way to really understand how to use these tools on your own. So that way, I'm very quickly here with the live trading days teaching you how to fish, right? Which is certainly the goal for the mastery, but we're kind of doing it in a in a shortened session for classes. And so I'm trying to teach you how to fish with the strategy, and that way you can actually implement it, understand how to use the indicators, how to understand to use the strategy during real time, and be able to fish on your own. And it's always an informal goal to strive to make enough profit to pay for your investment in your tools and in the class. And, of course, I don't know what the market's going to bring. But ideally, that's the situation. I know for our last class that we did, we made a pretty good amount of money in the live trading to at least cover, I think, the majority, if not all of the profit from that package, if I remember correctly. And once again, and that was on the minimum contract amount, right? So if you do multiple contracts than you easily paid for the last class. But the live trading days, the 2 additional ones are the 3rd, February 17th from 1 to 3, as well as the February 19th from 1 to 3 as well. Oh, and I apologize, guys. The elite package, I just got a note here, is 1087, not 1097. So that must have been a typo. But $10 less, right? Always, always good when the typo works in your favor. So at the end of the day, right, the compound butterfly strategy can help you grow your account by being a forgiving strategy with a great risk versus reward scenario. It gives you a strategy that works in bullish, bearish, and consolidating market types. It's creating profits in your account while spending less time in front of your computer, right? Certainly I can't spend time in front of my computer all day, but I've been able to use this strategy successfully in my account. It gives you more information about the divergent bar indicator and the compound breakout tool and how to use these tools to help identify potential entries and exits. And last but not least, right at the end of the day, I want you to learn from this class how to grow an account even if you struggled in the past. I've certainly struggled in the past with risk and understanding it and how to grow my accounts. And these are strategies that I use now that have helped maintain my success while very much keeping and being mindful of risk and my overall risk tolerance. So of course, I want you to be able to learn in real time. So days of live trading to understand how to identify and using the tool, as well as using the strategy during market hours. So it's great to kind of think of the class as your lecture, right? You go to college, you go to your lecture class, you kind of understand the principle behind things, and then you go to the lab, right? And the lab is like our live trading days. That's where you actually learn everything that you take everything that you learned in the lecture and implement it in real time. So once again, those packages, the basic package is $497, as we can see here, with the compound butterfly class, the divergent bar indicator, the indicator install session, and the intro to verticals class, which has already been pre-recorded and available to you. It's the pro package, which includes all of those things, including the compound breakout tool and the 2 days of live trading. And then the elite package at 1087, right? So maybe I just misspoke. I apologize if I did. For those of you, I did see quite a bit of questions asking if this is going to be implemented mastery. Yes, it is. We've started to implement parts of this strategy in the mastery, not the entire thing yet. So I am looking to do that, but I didn't want to implement everything into the mastery before you guys had the full education around it first, for those of you who choose to, certainly. So that's why I haven't fully done it in our mastery class yet, but it will be something I implement in the future and adding to the toolbox for that. Yeah, so the mastery, the profit recycling mastery is something that I do throughout the year. It's basically where if you want me to keep fishing for you, right? If you kind of want the same input on the table and you don't want to go out there and fish for yourself, it's a great place to come and view the different types of strategies that I like to trade from the classes I've taught in the past. You'll see in real time how I trade my accounts. We have live trading once a month. But it involves a lot of different strategies that I've traded, like the profit recycling and the overnight profit strategy. The compound butterfly strategy class will focus solely on this strategy. It gives you a really in-depth information in the class itself, right? Over 4 hours to really learn what the strategy is. In the mastery, you don't really have that in-depth education. It's more just following along with the trades. And certainly I'm in the chat and stuff and kind of learning over my shoulder on things. And this, right, you get the in-depth information. You certainly get the indicators if you don't have those, the bonus class, the pro life trading days to really focus specifically on this strategy and how to trade it. And then that way you can kind of go off on your own if you feel like you have enough information there to be able to trade it and add it to your toolbox, hopefully to help grow your accounts as well. Angel, no, the profit recycling strategy is completely different from the compound butterfly strategy. So it's still on the same principle of, you know, we're taking overall capital in our account, putting it in trades quickly and taking it back off the table, right? Those short dated trades, that idea is still maintained within the strategy, but it's a completely different type of strategy. Yeah, not a problem. So the compound butterfly, Jimmy, it combines several different types of butterflies and it combines them within sometimes the same style trade to be able to implement a profit. So it's not just the standard butterfly that you're going to learn about in this class. It involves, unbalanced butterflies. It involves broken wing butterflies, and it involves them in combination of one another to be able to implement what is the compound butterfly strategy. So it's how you can work with those strategies together to make it extremely forgiving and still allow for those great profit examples. And Scott, I typically still do most of my trading within the last hour, 2 hours of the market day. That's why all of our live trading days are from 1 to 3, because that's usually when I open the majority of my trades is within the last few hours of market. I give the majority of the day to digest, unless I'm doing like something like intraday trading, and then I jump in from there. And then typically, right, I'll look to take profits anywhere throughout the market the next day. And Ken will be implementing the strategy within the mastery. So if you're looking for like a subscription type thing, implementing the strategy as well, it will be implemented into the mastery after we get through the class and the live trading days. I'll start using this a bit more within the mastery as well. And the reason why I like this strategy is just because it's helped me get some great profit potential versus low risk trades. So I still like my profit recycling strategy. I still love the overnight profit strategy as well. But I'm always looking for something that's going to complement what fits my trading plan and my trading style, which is very low risk trades, ideally shorter dated trades, and something that still allows for a nice profit potential. And as I was working through this last year, trying to figure out how I can implement these butterflies together and still allow for something that's very forgiving, maybe not as directional as some of my other strategies, and still can give me a profit or protect risk and certainly allow for some excellent return. And this is the strategy I developed to answer that question. So my profit recycling trade, sometimes, I'll get over that 100%, sometimes I don't. Here, I've gotten a bit more consistent on getting over 100% returns on my trades. So that's why I like having this in my toolbox. Marty, so yeah, we'll definitely touch on the 25% rule in the class. But in very basic terms, it's just about taking 25% of the account for new trades, 25% of the account for managed trades, and then leaving 50% of the account untouched. But we'll certainly go over that in the class. That's something I like to touch on for people who are new to understanding risk. So absolutely. And that's something I implement within the mastery and my main account and things like that too. So just, to understand, right, with this strategy, I'm still using it and being within my risk tolerance for only 25% typically of my account, right? Oh, baby bear, great. I'm looking forward to it too. I want to make sure I didn't miss any questions. So Greg, it depends on the trade, right? Greg's asking how much risk per trade in a 5K account. So overall in total for me, I typically don't risk more than 25% of the account. So in my mastery account, for example, unless I already have profits built up in there, of the original account value, I don't risk more than 25%. So that's 1250 of a 5K account. So this strategy, I won't put all 1250 within one trade of the strategy. I'll put it between multiple trades using the strategy, or multiple strategies in my accounts. So this can fit within a 5K account, and we could very easily open anywhere between 3 to 5 trades depending on what we're looking at with this strategy, and still be well within our risk tolerance. So a compound butterfly involves the broken wing butterfly, but it also involves, like I mentioned, the standard butterfly, iron flies, and unbalanced butterflies, excuse me. And it uses those in combination sometimes with one another, which we'll talk about more in the class. And then as I mentioned, yeah, the divergent bar indicator is available for TradeStation or Thinkorswim, as well as the compound breakout tool. And yes, I do use scans. There will be a scan available for this class based off the indicators. I typically use my scans on just the divergent bar indicator for it to follow through. But we do have that available for this class to be able to find it. Eric has been nice enough to do that for me because I'm not as savvy on scans. Greg, certainly I can touch on that in the class on when and why I would use the strategy versus other ones like the profit recycling or the overnight profit strategy. Absolutely. And sometimes it's about the change in the market, right? So if I'm a little bit more uncertain about the direction, if we're not in just a good, strong, bullish trend, right? Which, as of today, right, there's that little bit of uncertainty within the market. Is this going to drop or not? Then sometimes I'll tend to lean towards this strategy a bit more because it's a bit more forgiving than being in a directional vertical trade, for example. And yeah, so if you have both of the indicators and you want the elite package, for example, where you get the 2 live trading days or the 4 live trading days in either one, and you want the class, feel free to call in to support or sales, or certainly you can email us at support@simplertrading.com, and they'll be able to price out for you what the price would be without those indicators added. So that way you're not paying more for something that you already have. I wouldn't make you guys do that. That's just, that's silly. And Bala, no, not necessarily with the 5K account. So for example, that Tesla trade that had the huge win, that original risk was about, I want to say like 300 something dollars per contract. So that easily fits within my 1250 risk tolerance for new trades for a 5K account, and still allowed for that great reward. So, it depends on what the market's giving us. I, can't promise we'll see that exact kind of return. But certainly we can look to set up trades like that to where they allow for that excellent return, still keep the risk within our normal risk tolerance for the account, and then figure out from there, when, if and when and where to take those profits, right? Oh, and absolutely, Greg. I use Tastyworks for execution all the time and Thinkorswim for charting. That's actually what I will be doing for the class. I mainly trade out of Tastyworks. So, but as I've mentioned, for those of you who do have Tastyworks and want the indicators on there, they are in the process of slowly getting on board. I don't have a date of when they'll be added exactly, but I know they're on the list to be added. And so on the risk loss, typically what I do is I risk the full 100% of capital within a trade. But within the strategy, that's also why I've kind of tried to set it up too, where there's a part 1 and part 2 of the trade sometimes, where part of that trade will help cover the risk on the other side. So I try and be mindful of that. But typically when I go into a trade, and this is just for me personally, I risk 100% of the capital within it that I'm okay losing. That way I can let the signal and technicals play out like they need to, and I'm not getting into that emotional dark side of trading. And that's what I found works for me. If a stop works for you, then you might consider doing a stop, right? Or a stop loss. But for me personally, I found when I did stop losses, oftentimes I would get called out by the market on the stop loss. I would take the loss in my account, and then the signal still followed through, the technical still followed through if I was just patient on the trade, if I had just given myself a bit more time. So that's what works for me personally. But you can always take what I'm showing you, right? What fits my personality type, and then adapt it for your trading style. Because that's ultimately the plan. Nobody's going to match up with, their trading style and how everything works. But the idea is that you can take something that's been working well for me and hopefully adapt it to where it can work well for you too. And there aren't any trade alerts in the basic package because unfortunately they're not a part of the live trading days. So you'll get the class, you'll get all the education around it. But if you want push alerts or notifications, those come with the live trading day. So you'd either have to get the pro or the elite package for that. And I probably won't be opening any trades on this in Thinkorswim. I might, depending on, the risk on what it is. If it's, good for the challenge, maybe the $500 challenge. But I can certainly show you during one of the live trading days, or if we have time at the end of the class during the Q&A session, then I'd be happy to show you how to open and close a trade on Thinkorswim. You can also look that up on YouTube, though. They have some great educational videos. Corey, I can usually find several setups within a week. It's just about scanning the charts, and it depends on what you're, right? But this strategy can be used in a bullish, a bearish, and a consolidating trend. So you can really find the setup wherever. It's just about implementing it the right style of butterfly, right? For the right market type. So guys, that's my time. I apologize. I couldn't stay on very longer, but I can hear the little one in the background. So it is probably time for a feeding. I appreciate you guys joining me. I hope you'll all have a great rest of your evening. As always, may the trade be with you for my Star Wars fans. And once again, please feel free if you have any questions, or if you want the class but have one or both of the indicators, please feel free to call support or email in, and they will be happy to help address any of your questions. Especially if I missed anything, I apologize. Kind of went by fast. I tried scrolling through, but please feel free to ask them, and they'll be able to help answer you to the best of our abilities, right? So as always, thank you so much for joining me here. I really appreciate it. Have a wonderful rest of your night. And for those of you who are ST members in the options room or something like that, I will certainly talk to y'all again tomorrow. Bye.